Good morning once again, friends. I hope you all had a refreshing break and enjoyed the breakfast. Though it came a little later than expected, we sincerely apologize for the delay and thank you all of your patience and understanding. Friends, now let us back to what we are here for learning, updating, and growing together as professionals. We are about to begin the second session of our seminar, and the topic is both timely and practical. Issue in ITR filing. Something we are all neck deep in during this time of the year, because this is the ITR filing time. To guide us through this subject, we are privileged to have with us CA Haridas Bhat, a seasonal professional known for his sharp insights and hand-on approach to real-time tax filing challenges, who is also past convener our esteemed study circuit. इनके लिए मैं इतना ही कर सकता हूं, कागजों की दुनिया तारीखों की चाल है, आईटीआर की फाइलिंग अब एक कमाल है, जहां उलझे कानून वहां सुलझाए ज्ञान, हरिदास भट्ट जी टैक्स जगत के हैं मेहमान. In this word, I request our past convener Seema Mehta to give a brief introduction of our past convener श्री हरिदास जी भट्ट. हालांकि उनको इंट्रोडक्शन की कोई जरूरत नहीं है, उनका फेस ही खुद में एक इंट्रोडक्शन है. बट सीमा जी प्लीज.
Thank you, Kailash ji, for giving me the opportunity to introduce CA Haridas Bhat. He is a partner in GMJ and Company. He is practicing since in 1986. He is mainly specialized in income tax and regularly attend IT/AT matters. He is co-opted members of various WRC and ICI committees. He delivered lectures in WRC study circles on income tax matters. He was a past convener of JP Nagar CP study circle. With this brief introduction, I request Mahesh Bhai and Nidhi to give a memento as a token of. I welcome Haridas Bhat ji. Now dice is yours.
We welcome with lot of applause.
Good morning, everybody. I hope video was good. अभी क्या है ना, last week I attended one tribunal. One person came from Delhi especially, and he was telling the bench, sir, I've given a small brief of 94 pages. I say this small memento बोल के इतना बड़ा डब्बा दे रहा है, ये क्या है?
कुछ नहीं होता है.
अभी सी जैसे कैलाश जी ने शायरी बोला, मुझे लगा मैं शाम का कुछ महफिल में बैठा हुआ. अभी इनकम टैक्स बात करें या शायरी का बात करें? चलो तो
You can use the napkin as tool.
अभी नैपकिन हैंडकरचीफ पता नहीं क्या क्या आएगा हम तो सब यूज करेंगे See, एक बात है actually this AI especially what you get the drafted from assistants you can get drafted from the AI that makes your life easier. Anyway, we are not in the AI now. We are into the ITR filing new forms and what are the changes, etc. What I will take you through is what are the changes and what are the issues. Then, if time permits, I'll go for that non-corporate balance sheet formats because that's also new for all the now whichever balance sheet you're signing, it should be as per the format. That I'll go through. Depends on it's already 11:48 now. और आई थिंक 1 बजे बेल होता है कैलाश जी 1:15 हाँ 1:15 so I got 1.5 hours let me try to do some justice and I am not expert in procedures I got my partner Harshal as my lovely stand so any queries on the procedure he'll help me to answer it
सर आपकी इच्छा जब तक हम सब बैठे रहेंगे उठेंगे नहीं।
ये महफिल नहीं चल रहा कैलाश जी सेशन चालू है Then we will start with the issues on ITR. That is the new ITR filing, which forms you got. तेरा ये light बंद कर दो ना इधर का. Screen is visible, and this is more of an elementary presentation. It's not nothing much technical in it because what are the new things, what we should do, etc. Then we can take the questions in the middle also. There is no problem because. In JB Nagar, when I attend, you people give me less chance to talk myself, and there will be more questions. So I'm ready for that. So ITR 1, who can file? Resident individuals, not ordinary resident or non-resident, income up to 50 lakhs, one house property, etc., etc. So key income sources is salary, pension, one house property, other source, LTCG up to 1.25 lakhs, and aggregate income up to rupees 5,000. Now, what is the major changes? Now, LTCG under section 112A up to 1.2 lakhs, 25 lakhs, which was not allowed earlier, is allowed in the form number 1. So earlier, any capital gain was supposed to be directly ITR 2. Now, if it is below 1.25, you can go for ITR 1. And one more change is, we'll come to that later again. Earlier, you could use the Aadhaar enrollment ID also. Now it is not possible. You should have the full Aadhaar only. ITR 2, there is no major changes. Eligibility largely is unchanged. ITR 3, there is individual achievers with business or professional income, partners in a firm, trading income, are not eligible for 1, 2, or 4. There is key sources are business, profession, salary, house property, capital gains, and other sources. Now here changes must specify section 44 BBC for cruise business. Details of bifurcation of capital gain before and after 23rd July. There is a transitionary provision. This year the forms are having it. ITR 4. Major changes are now allows LTCG up to 1.25 lakhs from listed equity shares and equity mutual funds and cannot, that other enroll ID cannot be used now. 4, 5, 6, 7. Should I go through the details or I think it's not necessary. Now let's go to the changes. Changes in ITR 1. What are the changes in ITR 1? Earlier, LTCG earners were not eligible for ITR 1. Now, LTCG up to 1.2 lakhs, 5 lakhs is allowed under section 112A. The most significant change in ITR 1 is expanded eligibility of taxpayers with the long-term capital gains. Previously, any individual with capital gains was required to file the more complex ITR 2. Now, taxpayers can use ITR for if their LTCG from listed equity shares or equity oriented mutual funds under section 100 does not exceed 1.25 lakhs and they have no carry forward or brought forward losses. This change is particularly beneficial given the Union Budget 24 increase in the LTCG exemption limit from 1 lakhs to 1.25 lakhs. Modification allows small investors to continue using the simplified ITR1 form instead of migrating to the more complex form, significantly reducing compliance burden. Now coming in this, now ITR1 is so simplified. Now that general person doesn't have the requirement to go to a CA for filing the return. Especially, I think when I started practice or when I missed practice, all these corporate houses used to go for the bulk ITR filing, and BCS used to do it for a discounted rate because bulk filing, Form 16 to this one. Now that's all stopped because with the if you go with the 26AS and AS and with all these ITR modifications where you get all the drop down facility and all, one person can file his own return if he doesn't have any complications. So it's we are worried about AIs, and this also reduces small practitioners' business. Coming to ITR1 further changes, now all the deductions are now anyway. The deductions are not material because 90% of the cases ITR now nobody takes the deductions because you are beneficial with the new scheme only. But if you are going for the deduction, especially when people claim HRA and housing loan both together, the old scheme still works out better for a person with the income less than 50 lakhs. So old scheme is still relevant. So now they have started all additional tables for the claiming of the deductions. Now there is a new schedule for Schedule EA for 1013A for HRA details. Now more detailed HRA is required. Schedule EA specifically captures household elements details requiring information such as place of work, actual HRA received, actual rent paid, and salary details. I've seen many corporate houses also used to give both HRA exemption as well as interest on housing property. So interest on housing property loss is available only if you have got if you are using for self-occupied property. And if you are using the self-occupied property, your own property, where is the question of HRA? There is some exemptions given for the place of work if you are compulsorily have to give 2 places, etc. But anyway, that is on the paper, and many corporate houses give both the benefits. Now with this new HRA schedule, while processing only will be caught, then you can't claim both. This represents a substantial shift from the previous years when HRA details were captured through employer forms only. And we had issues because if the HRA claim you are doing, if it is not part of Form 16 or if the employer is not given deduction, there used to be challenge and there used to be questions, disallowances, etc. Anyway, now with this, that there is a claim also should be fine. Now next is no dedicated home loan interest schedule was there earlier. You have to just write the interest schedule. Now schedule 24B is added for the home loan interest. This is for the better home loan reporting, and section 24B has been added for reporting home loan interest deductions requiring specifications of whether the loan is from a bank or other financial institution. This enhancement provides better tracking of housing loan interest claims and improves the verification process. Means not better for us, better for the department. So if you are having any claim, because these are the only 2 claims which makes a difference if you want to go under old scheme. So these both schemes, they made it a bit more watertight. So you can't get away with any mistakes in that. Their enhanced disclosure further are basic deduction reporting, cross level deduction reporting with drop downs. Means if you are going further than ATC and ATG and all things, there will be drop downs will be there. This technically it improves the transparency of deductions. The form now requires cross level deduction reporting with drop down selections for various sections under section ATC to ATU. This replaces the previous free form entry system and ensures more accurate categorization of deductions claimed. The change promotes transparency and reduces errors in deduction claims while facilitating better verification by tax authorities. Once again, these all things are done for the verification by tax authorities, and plus beneficial if somebody is self-filing the return, because these all drop downs help you so that you don't make a wrong claim. So this is how we are graduating into all these systems. Earlier, the Saral, although Saral was introduced one-page return, it was not Saral. The person was not able to file the returns. But now, with this Saral and Sugam, with both, one person can do the self-filing of the return also. The income tax ITP no, there is not ITP. There is one more word. TRP, tax return providers. Those all the jobs may not be there. Then next is basic changes. Earlier, Aadhaar enrollment ID also was accepted. Now only full 12-digit Aadhaar number accepted. But this is the stricter authentication requirement. And many people might be facing a problem with the name change. If there is not only spelling, if there is change in the spacing, and if there is father's name first, given name first, whatever is some error also, it is showing the error. And how to sort out the error, we are also struggling, so that later on we'll address to that. The critical universal changes involves authentication requirements where the Aadhaar enrollment ID is no longer accepted for ITR filing. Only the full 12-digit Aadhaar number is now mandatory, reflecting the government's stricter approach to taxpayer verification. The change eliminates potential fraud and ensures more robust taxpayer identification across the filing corrections. Now there is one more is country code update. Earlier manual used to write the country code manually. Now it is default is 91. It's India. So you need not mention that. That is one thing which is easier for us. ITR 2 capital gain reporting. This is specifically for the current year only because of the split period. So now earlier it was single reporting for all periods. Now it is double for the before 22 and after 23. The things are different. ITR 2 introduces there is separate reporting before and after 23rd July 24. Accurate tax calculation based on the new rates. ITR 2 introduced mandatory segregation of capital gain reporting based on the transaction dates. Taxpayer must now report tax capital gain separately for transactions executed before and after July 23-24. Aligning with the Finance Act 24, changes that modified capital gains tax rate and indexation benefits. If you are using any software for your return filing, software takes care of itself, need not enter separately. If you are using the utility, that is a separate, you have to enter those things separately. The bifurcation is critical because different tax rate applied to transactions conducted before and after the cutoff date. For equity shares and mutual fund, STCG rates change from 15% to 20%, LTCG from 10% to 12.5%, with effective from July 23-24. This is one better thing because earlier the asset reporting threshold was 50 lakhs. And salary people, especially, nobody has got any record of their assets other than what they hold. So we pick approximately whatever they give the data, we used to put that. Other than the financial assets, other assets were basically it was an approximation. Now they have increased it to 1 crore. So now anyway, there is 1 crore sales. There are many people who earn more than 1 crore salary now because the value of crore has come down. But still, this is better. So that even 50 lakh means many people used to come. Now 1 crore, it's a welcome change. So new asset reporting threshold now raised to 1 crore. Reduced compliance burden for the mid-income earners. This is a major relief for middle-income taxpayers. Comes through the doubling of the asset tax liability reporting threshold from 50 lakh to 1 crore. This change in the Schedule EL means that only taxpayers with the gross total income exceeding 1 crore after considering deductions under Chapter 6A are required to furnish the details of assets and liability information. This modification significantly reduces the compliance burden for taxpayers earning between 50 to 1 lakh, eliminating the need for detailed asset disclosure that was previously mandatory. The change acknowledges that such detailed reporting should be reserved for higher income categories where greater scrutiny is warranted. Next is TDS reporting. Earlier, no section-wise reporting was required. And now mandatory TDS section code reporting for better TDS recognition, which is now a requirement. All ITR forms now require mandatory specific TDS section codes under which tax was deducted. Pardon? Yeah. This applies all the ITRs. And this enhancement promotes better traceability and cross verification from 26 years, significantly improving the accuracy of TDS credit claims. Now here some basic problems we face is if somebody deducts the tax on the wrong section. Now, especially if you are doing manpower supply, manpower supply is technically covered under 194C, but that is possible that they deduct under professional fees. And if you show that, then your 44 ED will be rejected, telling that you have got an income under 44, you are covered under 44 EDA. This type of problems will be there, and this will lead to litigation. And there is a good possibility that we don't know where the time will tell. These corrections may be made in the processing only. And then you have to appeal to the processing only, because once the process you send back to the CPC for rectification, you get the rectification rejected within minutes. Sometimes it may take days. Majority times you file a rectification, within minutes you get the rejection. There is no correction warranted. So this misquote by the deductors can put you into trouble. And what is the request for that? You have to ask them to change. But now, if they deducted 10%, they can't change it to 1% or 2%. They won't do that. So, these are the problems will be there. Earlier, this was probably not caught by the processing. And now processing will catch that. You will have trouble in that. Yeah. It will help you in litigation. If you don't object, then when you litigate, you say that then why did you, when you saw the AS, what did you do? So that will help you in litigation, because this is going to end up in the litigation. So if you use all the, whatever the possible things you can do, if you use that, it will help in litigation. And what they do is in this type of things, if the difference is minor, they don't ask any questions. For now, capital gain, sales, etc. If there is up to 10%, if the difference, there is no discrepancy or query raised. If the difference is huge, then definitely there will be some query, and chance of you getting the positive correction from the CPC is practically zero, and GAO will not touch it because it won't be transferred to the GAO at all. Then you have to go for the litigation. And litigation with the CAT appeals, now they are taking up some 10, 12-year-old appeals, which is filed 10, 12 years ago. Now they're taking up because the CAT appeals have given some scheme. Under that, they have given the marking based on their disposal. So that's why taking it up. Otherwise, this litigation, once it goes to the commission appeal, you never know when it will come up. But as on today, one thing is good. If there is a demand, you can directly approach ITAT for the stay. Earlier, the stay was with the JO, then the principal commissioner in charge, and then commissioner appeal. These are three people. Commissioner appeal, I have not seen any commissioner appeal giving stay of demand. So now you can directly go to the ITAT. ITAT will not ask you what you did there, this, etc. If there is stay rejection is there or not, they will hear you. And the ITAT stay hearing is if you file by Tuesday, Friday it will come. If you file after Thursday, it will come on next Friday. So it's taken up always on timely basis. Unlike the principal commissioners who you file an appeal, file a petition, and they will take months to address to that. So these all things are there, but now this TDS reporting, there is a good possibility that there will be enough litigation because of this cross-checking. One more reporting this time is buyback taxation. You all know that buyback taxation has put up some new funny area where you tax it as dividend and loss you claim it as a capital loss, and which will be carry forward and will be adjusted against capital loss, etc. So there is a separate in the form is allowing you that capital loss on buybacks is allowed if the dividend is reported. If there is no dividend reported, you can't enter this capital loss also. So this is for the buyback rules. From October 124, capital losses on share buybacks can only be claimed if the corresponding dividend income is reported under the income from other sources. This change addresses the revised treatment of the share buybacks where proceeds are now considered deemed dividends in shareholders' hands, which while companies no longer pay buyback taxes under section 115 QA. This I think during the budget we have discussed this because this can pose some really funny situations. If dividend may be 1 rupee or capital gain may be capital loss may be more than a lakh. But anyway, that 1 rupee is taxed and 1 lakh you have to offset if there is any other capital gain or carry forward. And carry forward, you know, there is a limitation on long-term carry forward also. Anyway, but if there is somebody say regular dealer in the stocks, he'll be able to do that. If otherwise, not possible. Whatever BBC, this is the new introduction done during the year. So that is implemented in the form. Enhanced deduction disclosure requirements, enabling the enhanced transparency. Section 40, this section addition, new section of 44 BBC for cruise shipping business. ITR 3 now includes section 44 BBC for cruise shipping business, addressing the presumptive taxation of non-resident cruise operators. Under this provision, 20% of the gross receipt from the passenger carriage is deemed taxable income, providing specific guidance for the specified business category. I think we may not be, there may not be much people interested in this cruise business. Now Sugam, ITR 4 Sugam. Here eligibility expanded that LTCG up to 1.25 lakhs is allowed under section 112A. Simplified filing for small business owners similar to ITR 1 and 1. ITR 4 now permits taxpayers with the long-term capital gain up to 1.25 lakhs from listed equity shares and equity oriented mutual funds to use this simplified form, provided they have no carry forward or brought forward losses. Remember that in carry forward or losses, whether capital gain or the business losses, you are not eligible for this. Plus presumptive tax threshold, you are aware that threshold fixed threshold for presumptive tax enhanced thresholds. Now it is 3 crores for 44 AD, 75 lakhs for 44 ADA. Higher eligibility for presumptive taxation. The form reflects the increased thresholds for presumptive taxation schemes. The turnover limit under 44 AD has been raised to rupees 3 crore for businesses and 75 lakhs for the 44 AD for the professionals, provided 95% or more transactions are conducted digitally.
95% is only
5%. That's 5. Yeah. Digital payment both. 5%. Both should not exceed 5%. Expense also. 10 IA integration. You know, when this new scheme, old scheme started, so you are supposed to file, especially in the companies where the filing of the form is compulsory. You are supposed to do in the form. You are supposed to enable it. You have to take it in the tax report. You are supposed to report it, and then you have to file a form 10E. So there are so many places where 10E was rejected and 10E was not filed, and there is a lot of litigation. Then government through the circular enhanced the limit. Still the litigation that somebody missed the enhancement, and there was so much confusion. So now this 10A they have now integrated the form. What they did is now form 10 IEA acknowledgement number requires compliance requirement for regime switching. A critical new requirements involves 10 IEA acknowledgement number reporting for taxation opting out of the new tax. We all know that this year new tax is by default. You do not follow it for many things. If you want to go for the old, then you have to fill the form. Now, so that you don't miss out anything, here you have to put the acknowledgement number of that form fill. They've got done the full integration, why the form is required. Anyway, that we can't question that. At least now, chance of missing out is not there because you have to put the acknowledgement number. Business income earners switching from new to old tax regime must provide the form 10 IE acknowledgement number in their ITR 4 and justify any delay in filing in it. This ensures proper documentation of tax regime choices and prevents inadvertent enrollment in the default regime, new regime, mandatory Form 10A for business income. For the non-business earner, the form is not mandatory. Continuing that, with the new tax regime becoming the default from AY 25-26, taxpayer with the business or professional income must file Form 10A if they wish to continue under the old regime. This form must be submitted before the ITR due date, that is September 2015 for the non-audits, and acknowledged number must be mentioned in the ITR filing. This requirement applies specifically to taxpayers filing ITR 3 or ITR 4 with business income. Salaried individual without business income can simply select the opt-out of the new citizen option directly in their ITR forms without needing to form the Form 10 IEA. Now coming to the additional forms, these are the main forms. What are the additional forms you have to fill for filing the return? First one is Form 67, that is for the foreign tax credit relief under Section 90 or 91. Who should file it? Residents with foreign income who paid tax abroad. If you are taking the credit, then only. If you are having just income, if there is no withholding tax, then it's not required. Filing deadline is before the ITR due date. Means you should precede your tax return. Of course, there is no linkage here, but you should precede the tax return. Then Form 10IA, disability relief under Section 80DD or 80U. Individual HF is disabled dependents or self-disabled, and it also has to be filed before ITR filing. Form 10A, registration for charitable religious trust under Section 12A, 12B, 1023 ATG. This should be filed by trust, NGO, educational institution seeking tax exemption. This is as per the register requirement. This is not exactly for the filing. It's as per the anyway. Trust is one area by itself where government has got more distrust on us than the trust. Anyway, we are living with it. And plus, to add to our problems, there is one DAT exemption, CAT exemption who is sitting now, but he left, right, and center rejects all the applications. And I am one of the person with the 100% result, all rejected. And surprisingly, or not surprisingly, factually, all the rejections have been now sent back or approved by the ITR. Means it is not that what we have filed is wrong, but their presumption or the way they handle the things are totally something different. Other forms, 10B, 10BB, this for the charitable trust once again, with the income more than 5 crores. And it's less than that, 10BB, that has started 2 years back. The institute has come out with the big booklet, how to file it. Well, I remember it because I am also party to that booklet. 3CA, 3CB, 3CD, we know that. That is, as on now, it stands 30th September only. So 15th September is the other non-audits, and still some forms are not available, and we are already in the August. So I don't know. I think Kailash must have got the direct call from Sitaraman telling us September 30 को कोई ड्यू डेट नहीं होगा, आप पिकनिक में जाओ. So 21st September he has kept the picnic, thinking that there is no due date on 30th September. And I am inclined to believe him.
Yes, sir.
15 CACB, that is, and this for the remittance, and 12BB, employee tax deduction declarations. This is, in the beginning of the year, you have to file it, and nothing to, that's all the forms I've compiled here. This is not exactly to do with the returns, but other forms to be filed. Now we are on the due dates. So, and this is the due date currently we are starting in. As per the law, the due date was 31st July. Now it is 15th September. For tax audit, it stands today 30th September. For filing, it's 1 year, 1 month later than that. And for the transfer provisions, there is 1 month extra time both places. So let us see. I don't think we can plan something of the year-end holiday, because the way things are going, there should be something there.
Next year.
वो that I have to ask कैलाश जी. तो फॉरेन टूर कुछ प्लान करेंगे तो भी.
श्रीलंका.
Now there is one more change in the ITR is they've introduced some new business codes. So that is commission agents, so we call it as Kachadatia. That is agent brokers working on commission. Then social media influencers and content creators. That reminds me because you know that one small boy of 6th standard, because my wife is a professor, my Kamali Bai said that it's exam mein thoda sikhao. So he came and I was also sitting. So my wife asked him, what do you want to do after growing up? He said, YouTuber. So I was, now I think Nirmala Sitaram also must have heard it. That's why I put that one more clause of professionals, social media influencers and content creators. That's what.
Excuse me.
Yeah. Not able to hear you. Can you? If it is.
For 24-25. Because this has come after 31st March, right? I don't know how did it be implemented because whether the tax audit will be compulsory for these people.
See, as a professional, if you are getting more than 75 lakh, or as a professional, if you get less than 75 lakhs and your profit is less than 50%, either way, tax audit is applicable. Now, whether earlier this was not, it's a business course. They are not telling it's a new business course. So the influencers and the content creators were not specifically defined under the professions as a profession. Now also they have not changed any decision of the professional here. They have added this as one additional code. So all this, we earlier also used to take the stand that these people are professionals because they are giving professional service and getting the fees. And that is not a commission or brokerage. So it is covered, according to me, it is covered under 44 ADA if you are below 75 lakhs. Otherwise, as a professional, audit is applicable.
I just wanted to know how many under this category falls.
Yeah, maybe because as somebody rightly said, this is the preferred profession now.
Yes, just considering the basic concept with which this new government came in. They said nothing will be applicable from retrospective effect. My question was reference to that.
No, I understood what you are telling, but what I'm telling is there is no change here. This is the only additional code introduced in the form. Yeah, there is no change in the act or law or anything. One code is introduced. See, if you have got a professional who is doing this, then you select this code. That's the only thing. Then there is for speculative trading also there is separate code now. Future and options also separate code, and buying and selling shares. If you're as a business, if you're doing buying and selling shares, you have to select that code. When earlier there's a maximum litigation regarding whether business or capital gain. Now it seems to be department is not bothered whether it is business or capital gain because in either way you'll be paying tax both ways, 20% and 30%, not a big huge difference. That's why they may not be carrying. But still, those circulars and those clarifications still hold good because there are so many. If you are doing continuous trading and the frequency of trade, number of scripts, and borrowing, these are the three things. If it is there, then it is better to classify as a business. Now let's come to some common problem which I have listed while filing. Filing accurate and timely income tax return is essential for compliance and to avoid penalties or delays in refunds. If you are wrong selection of the forms or anything mistake, that is it can be considered a defective return or it may not be processed. And defective return, now there is hardly any time for the revised return and all. If you don't clear the defect within 30 days, what will it? Within 30 days, if you don't clear the defect, then you will be non-filer. And there is nothing in the Income Tax Act allows you to claim the refund if you don't file the return in time. So filing the proper return is the time bound now, because earlier we used to get a lot of time for the revised return and all other things. Now it's all curtailed. So choosing the wrong form, selecting an incorrect form renders a return defective and may require rectification or lead to rejection. So you should be very careful. Fortunately now, I think I don't know how many people of you are using the software for return filing. Yeah, but some people are much shied away. They are not raising the hand, but still, I think 80 to 75 to 80% people must be filing through the software. And usually, software takes care of it. Actually, if you select the wrong form, it gives you a warning that you are selecting the wrong form. Use the right form. So that way, that mistakes are taken care of. But if somebody is using the utility, you should be very careful on selecting the right return. Yeah.
ITR one was applicable, ITR two, typically that capital gains situation. So still the defense is there.
I don't think so, because you must have filed ITR 1 before this change, right? Yeah. No, you must have filed before the ITR 2 came into picture. One was filed.
Yes.
Yeah, I don't think there will be any defect. And 99% chances that it will be processed before September 15 if you file it, because they're processing within 15 days now. And if it is not processed, you better refile. If it is processed, then you know that it is processed and clear. Failure to e-verify the ITR. E-verification within 30 days of filing is mandatory. Unverified returns are treated as invalid, delaying the processing and inviting notices. And earlier, after 30 days, you have to file a reason of the condonation. You have to file and do that. Now they making it stricter and stricter. You never know that they may stop that condonation. Also, they may stop because they want to catch for the defaulters. So better take care. And plus, especially in case of non-residents and all, e-verification is not possible many times because Aadhaar is not mandatory. So through the bank, if they are having a facility, then only they can verify. Other e-verification doesn't happen. In that case, you have to file the ITRV, signed ITRV within the time. And my department is very particular. Once it reaches them, they once again acknowledge that your form is reached. So if you don't get the acknowledgement, you may have to resend it because there is no other acknowledgement of filing, but they acknowledge. Not reporting all the income sources, income from fixed deposits, savings account interest, capital gains, including mutual fund and fund switches, freelancing, and income of minor children must be declared. Omission lead to mismatches with AS and Form 26 data and possible notices. We will discuss that much more later because biggest problem is the mismatch in 26 AS is minimal, but mismatch in AS is a rampant. So let us discuss that, how to address that. You have a separate slide for that. Now, one is technical and validation errors on e-filing portal. This is every day. I think there are so many people are part of some CA groups. You can see the notice, it's not uploading, not filing, not working, etc. etc. This is the common problem. This may be is due to high traffic, browser compatibility, and corrupted XML uploads or usage of special characters can trigger errors such as validation completed, one error found. This actually major problem is special characters. Usually what we do is while inputting the address, by mistake we put the special characters hyphen 402A instead of 402-A. Then that leads to the rejection. Other data is all filled. So when you're filling the address, their chances of these errors are maximum. That depends on the luck. Sometimes it comes immediately, sometimes it doesn't. No, if anybody has got any, see, what I've seen is early morning, if you do the validation, it works well. And the current generation, nobody wants to start in the morning. Everybody wants to work in the late night. So late night, everybody like sits in the night and nothing works.
11 बजे के बाद
11 बजे के बाद चलता है. हाँ. Anyway, well, see, summarily, what its conclusion is that when there is less traffic, it works faster. When there is more traffic, it doesn't work. Because हमारा सब ऑफिस में क्या होता है शाम को पूरा करके कंप्लीट करके जाने का. So there will be huge traffic during that time. So when it is done, there is no issue. Yeah.
Sometimes, I mean, it's not received in the past.
Then you have to check with the other. Your mobile number may not have been registered or not linked properly or whatever it is. Check with the other. And changing the mobile number in other is a very long process.
Yes.
Because you have to physically go and the post offices and they give tokens. एक post office 10 token देता है दिन का, and you have to go in time and get it done. It's any change, and now I think it is high time, but everybody now has to change the photo because Aadhaar ID is used as a photo ID everywhere. Now I don't look the same what I looked 15 years back. So this, and if you want to change that, then you have to go through this tedious process of waiting in the queue. Let us see. Pardon? Okay, he said change of photo is very simple.
online good. Online the checkers.
But you look the same 15 years back also. हमारा तो भाग गया ना थोड़ा different होता है.
Sir, for NRIs, how can they verify? Aadhaar based can be verified?
There are 3 ways of verification, e-verification. One is Aadhaar, one is bank, and other one is DSC and physical. So DSC is, we get the DSC done for the foreigners who wants to do the remittance because 15 CSEB signature के लिए DSC works. If the DSC is there, through that you can do it, and if not, you have to send physically.
Otherwise, sitting there abroad, they can send us the OTP. They can share the OTP for other ways of.
If they are enabled, if they have retained the OTP enabled phone with them with the SMS facility on, then they can do that.
Okay.
Yeah. That nowadays everybody do because everybody has a bank account here. To operate the bank account, you need the OTP. And if you want to continue the phone number only for SMSs, service providers also charge a very nominal fees. And that too, if you convert it into dollars, it becomes very cheap. It works. Now, incorrect or missing deductions or exemptions, forgetting to claim eligible deduction under sections 80 CCD, etc., or additional relief like 89(1), arrears relief in Form 10 IE increases the tax liability. Claim only genuine documented deductions to avoid scrutiny. You have to be, what we are telling is you have to be very careful while claiming the deduction. If you are not claiming deduction, it's fine. Claiming deduction will be perfect. And if there is one small error in your uploading or any form not proper, etc., also, there is a good chance that while processing only, they will reject the claim. Then what you will end up is your claim is rejected and you are in the old regime. You pay and you paying the higher tax. As on today, you know that the claim is still rejected, you can go for the new scheme. But once you opt for it and while processing, that can be possibly after double slap. Then unvalidated bank accounts for refunds. Failure to pre-validate bank accounts or portal delays refunds and credits. Account validation must be completed under the profile section before filing. So is now I think by now this is a big problem a couple of years back because they used to spend that your refund is rejected because account is not validated. And I don't know how it works because you validate 1 year, next year it shows once again not validated. So these are all we are living with all sorts of problems. But only thing is this time if there is a refund, kindly check that whether your account is validated or not, and you tick the same account which is validated for refund. Because if there is 3 accounts and if you take one account which is not validated, you got 2 other validated accounts, your refund still will be rejected. And omission of mandatory forms, supporting forms also will be trouble. And beyond choosing the correct ITR form, taxpayers must also submit certain ancillary statements when applicable. Failing to file these can render the return defective or lead to disturbances of claims that we already discussed. Timing and reporting delays. Late TDS filing by banks or employees can cause Form 26 to be updated after AS pulls data. SFT, the specific financial transactions submission to the AS may lag behind actual transactions, leading to temporary discrepancies. See, these are the two things we are failing, because banks, if there is any mistake in the banks, you go to the bank that my TDS is wrong or whatever it is, they take their own sweet time to rectify it, because it's all outsourced. And once we found out that outsource is sitting somewhere in Malaysia and doing the TDS processing. So this is a which everybody does the work where cheap labor they get it done. That is okay. So in the process, you file the return, your TDS credit is not there. So then you won't get the credit. And it is then what will you do if the credit you file the return today based on the 23 years, you don't cross tally the income also. Then later on, TDS income both comes. What will you do? So these all problems are there. And you tell me practically after filing the return, who goes through the 26 years or years? Once you cross tally and file, you forget it. But if there is any this mismatch, it will lead to some further problem. And especially the SFT. SFT, many people do not file the SFT in time. And they file also, then there will be some errors, they update errors later. Then SFT directly comes to your AS. So, and as it is, we are having enough problem with the AS. And this late filing SFT will multiply our problems. Data entry errors and PAN mismatches. Incorrect PAN entries in TDS statements lead to missing or misattributed deductions. Data entry mistake for deduction, wrong amounts payment of taxes after both 26A and AS. I know this. Now my TDS, I'm not having the credit. I'll go to the banker and he will correct me. Maybe he has created to somebody else, which will be changed. Think of otherwise around. You file it. And you say that, okay, as per the bank, this is the interest, you filed it. Then later on they rectify because they've given credit to somebody else and your income will increase. But these are all problems you have to, what in the processing as well after process, this in the processing it don't come. Afterward they may send the queries for the mismatch. And if the mismatch is less than 10%, I don't think they send any query. If there is a major mismatch, they send the query. Scope related omissions, that is Form 26 omits non-TDS incomes entirely, like bank interest under 10,000, dividend income, capital gains, some security, etc. ES may include transactions not relevant to taxable income also, like low value credit card spends, which taxpayers sometimes overlook in the ITR. So earlier it was only one data, 26, and now it is two data. So if there is, especially now since the IDFC bank were here, so IDFC gives the FD rate on your savings bank account also. And on savings bank account, there is no TDS. So it can be for the, especially for the IDFC account holders, it can be a big figure without TDS. And that is not captured in the 26, but now AS captures. This time, I've not come across any case where AS missing the interest, but still some of the cooperative banks and other banks, they may not be filing SFT or whatever is error. There is a chance of mismatch. You may have the income, it is not under AS. And if somebody wants to take the chance, if it is not in AS, I'm not showing the income, I don't support that. If it is, you have to go for the higher of all. And if there is AS, you feel that something is not relating to you, better object that in the facility and then move on. Now, this is the basic problems I think majority people are having is duplicate and high value transactions. Yes, occasionally shows duplicates when multiple entities report the same transaction. That is mutual fund redemption reported by both AMC and the registrar. And high value credit card or property transactions in AS that are reflected in ITR can trigger notices even if non-taxable. So especially, in the mutual funds and all, the switch also is covered here. And switch is taxable also. But if you talk to the client, did you sell any mutual fund? He said no. So you go by his word and say that no capital, but you end up with the notice because there was a capital gain. According to him, there is no capital gain because he sincerely had told that he didn't sell anything, but it is a taxable capital gain. So that you have to see that you can, that if there is, and there is a good chance that it is added twice because it comes from two sources, mutual fund redemption, AMC as well as register, for example. And in case of property, I don't know how it comes. It comes many times, it comes twice. No, four times. Yeah, eight times, four times. Four sellers, exactly. If there is multiple sellers and multiple buyers, joint selling and joint buying, so it comes reported multiple times. And it doesn't report your share. It reports the full value. So anyway, that you can object to that, and your objection will be rejected. And if the A doesn't agree, you may get one notice on that also. And that I think we are all facing. So we will face in future also.
यहाँ पे कसम की
हाँ.
कि जो हम रिपोर्ट करते हैं, there are three entry comes. One is from the sub-register office, that is SFT. इसमें एक एक्टिव होता है, एक नॉन एक्टिव होता है. तो एक्टिव इज द राइट वन. सेकंड एक टीडीएस से आता है और नीचे फिर और अलग से आता है कि रिसिप्ट sale of property, receipt of the immovable property.
Yeah.
तो ये तीनों पोर्शन में अपने को एक कोड करना है. So should we give preference to TDS or which one? Because TDS is the right part practically to consider the claim of the TDS.
Yeah. Now coming to the TDS, if there is a joint holder, as per law, if your share is not defined, you're equal holders. Whether you put the second name for the convenience sake, for the succession sake, or whatever it is, but as per law, it is equal. In that case, TDS, the buyer will deduct TDS from both the accounts. And if the TDS is on both the accounts, then it is suggested to show the capital gains also in both the accounts. But while making the deal only, you can talk to the buyer and you can make the TDS in one account. For that, if I am buying, I'll ask for the indemnity from you, affidavit and indemnity, telling that the second name is nominee, and plus any loss I'll put it standard. With that, if the TDS is deducted in one name, then you can report in one name. If the TDS in two names, you can't go for two.
The voting part, as far as when you make the objection, so in that course, the register entry should be objected. It is duplicate entry. TDS entry should be kept as it is, and the receipt of the immovable property also you have to mention that duplicate entry. So it happens that the only one entry will remain as a effectively. You have objected the another two entries.
Yeah, everybody understood this? Yes. Yeah, because if there is what he's telling is there are three reportings done, one for the TDS, one from the registrar, one for the receipt of money. So in that case, you don't object to the TDS item and object to the other two, telling that is duplicate entries.
But register there, the mention is that the transaction value and receipt is mentioned as actual payment.
Exactly. That is why your object to that.
Is it necessary to object?
It is necessary to object because there are multiple entries. And your right entry is where TDS is deducted. That is the correct one. Because that if you are a joint holder, TDS deduction will show only your property value.
Because you want to reject transaction value of register.
Yes. Duplicate entry. Objecting that duplicate.
Duplicate.
Sir, I have got one question. Suppose the computation is showing salary, but it's not captured in AIS, then should we report
See, thing is, EAS, salary is kept in an EAS?
Yes.
Yeah. Salary is kept in EAS if you file the return in 26 AS and EAS both. If there is no TDS, when there is no TDS, employers got the option to file your data or not in section in form 24. If you have preferred not to file the data of the people where the TDS is not deducted, then it won't capture anywhere, no? Neither in 26 AS nor in EAS.
Only PDF is there, then only dispute. Then only.
No. See, when it is captured in EAS, if there is a TDS, you can get a salary, no, without TDS. Now the threshold limit is too quite high.
Without TDS also the entry is coming, because the year five.
Exactly, that's what I'm telling.
Salary.
If the employer opts to file the details of non-deductors also, he's duty bound to file. He's duty bound to file the details of all salaries and what is the tax deducted. But many employers don't take where TDS is not, they don't report. In that case, it won't come. Where does the AS come from? It's from SFT and this TDS and all data. It's a collation of data which department has got, either through SFT or through the TDS center or through the registrar. And there are so many other people who has to give the
I put the computation, that is that when I did the comparative analysis of AI and to the software, it's when just salary, sorry, computation salary is showing. But in AI, this is not reflected.
That's fine, no? If you see, other way around is a problem. This is not a problem. If you are offering some more income which is not in the system, there is absolutely no issue. If there is something in the system which you are not offering, then it's an issue. Corrective actions for mismatches. Reconcile your bank statement from 1616A, broker reports and 20 says with the AS line by line. Use the AS feedback facility, that is log on to the income tax e-filing portal and info statement, select the record, choose the reason, that is information is not fully correct, duplicate, etc. There is a drop down is available and you can submit. Our third option, corrective, is contact the deductor, employer, bank, mutual fund authority to rectify their TDS return if the form 20 says data is incorrect. Sometimes because of this outsourcing, it happens. They deduct higher tax, and then while the TDS return filing, those people they gross up and put higher income also. That leads to problem many times because technically higher tax is fine. If they deduct in the wrong section, higher tax, I said BS paid. He said, give me the credit, change the section. When they change the section, if they change the income, then you are in trouble. Yeah. Revise your ITR if additional taxable income appears in AS post filing or respond via e-proceeding procedure to explain the non-taxable incomes. The window is very small because your filing due date itself is September 15 now, and before December you have to do that. And if you have got any doubt or if you miss something, you can go through the AS once again December. Otherwise, it's not possible to check everything. Maintain records of all communication and corrections requests to protect against the future notices or litigation. Whatever you do it, you retain it because this will be very helpful when in the litigation. Especially, CIT appeal, we never know because it's faceless and it's many times useless. But if you go to the tribunal, they will ask you what you have done from your side when you notice. So that time, if you have got some evidence, it will help you to get relief because in IT80, you get all types, this type of administration reliefs you get in IT80 without much hassle because they are very considerate. But in the CPC, it's all machine managed. So you have to face everything.
So, we have the TDS of we have a joint holder and the TDS has deducted on the single holder. And we have offered 50-50 on both the SSC, that's right and right. And the AO rejected half of the TDS shares, taking the half of the income has been offered. What stand do we take in this case?
Yeah, this Harshal will be able to explain that. I give mic. You know, there is a provision that you can split the TDS. If the one person, you can give the TDS credit, both, you can split the TDS, then claim it.
Yes, you have to transfer the TDS from the assessee, which you're not filing the return or not offering the income. The provision for transferring TDS. How do we do that? In the form, there is one. Box is there. You put that,
Mike.
does not belong to the assessee, you put the PAN number of the other assessee. Of course, the income is. First file that return and then file the assessee return in which you're offering the income.
And that works. That is, we didn't fail any, or there may be one rejection, ask for the rectification, they do it. That is.
We can do it for the later year for assessment year 18, 19 or the. See, now rectification is not allowed for your changing the GPI. Earlier years is not possible right now. Fight it out with the.
No, now for this, if the old case, only litigation is the issue. And litigation also, there is not good possibility because you have not done the procedures properly. Now, what you can get the relief is where the credit is not given, you can get the relief.
You can get.
Yeah, that much credit. That you can get from the litigation. But other person, you will not get credit now also. That he has to, for the other person, if you have not paid the tax considering the TDS, you have to pay the tax along with the interest.
TDS is dependent upon the bed expenses. And so when it is shows the gross amount.
In case of professionals, if you recover the out of pocket expenses, it is covered under GST also. And because the GST is covered, people will take a call that TDS is also covered. Then in that case, you have to, you don't have an option other than showing it as income. In income only, you can say professional fee received and reimbursement expense received separately, two items separately. As then there will be expense will be obviously their expenses. So, but that will be part of your income, and TDS is rightly deducted. There is nothing wrong in it.
Cannot be asked the deductor not deduct TDS on.
You think you are a consultant for the deductor? Will you give him that advice? It's not done because anybody who wants to comply, he wants to go by the safe route. They don't want to take any charges. So, and that is rightly so. Why anybody, when the GST is charged on that, why TDS should not be charged? Yes, there you have got an issue. So to be very frank, what we do is to the extent possible, we avoid getting the reimbursement of expenditure. We ask the client to spend. We explain them that if you spend, you'll be saving 18% in the first place. And TDS and taxation, that is actually it is neutral other than 44 ADA, otherwise it's neutral. So his client should spend directly so that you can avoid all these things. But of course, if there is the MNC, PSU and all, you don't have an option there. There you have to collect the expense separately and it will be part of your income.
Okay.
Yeah. No, if you claim from them, then all things will come. Yeah. But if they directly pay, there is no problem. Even the air tickets also. Air tickets, if you're traveling, if you book yourself and get the reimbursement, GST will come into picture. Otherwise, air ticket, there is no GST.
If clients, customers are deducting TDS under both the section.
Under
194J, 194C. While filing the return, we need to offer that income 4488, 4484.
See, the thing is, what is right and what is wrong? Let us explain that. What is wrong? You are, like, for example, let's take a manpower supply. So you are a contractor. You are not getting a professional fees. So you file as per the contractor only. But now, because of the new form where section wise it is separately to be reported, and otherwise also while processing also section wise reported, there is a good chance that you may get a notice. That time you have to do the litigation. Now, you have to do the cost benefit analysis, whether you want to go for the litigation or accept what is in the 26 AS or AS. That is the call you have to take. If there is a small item, then you can as well claim as per the head and go move on with it. And if you're an audited, then there is no problem. Whether it is under 184J or 184C, it makes no difference to you because you are having all the revenues.
Income under section 44 ADA, so can I refer under both the section 44 ADA, that part and 44 ADA 194?
Income tax allows you to claim under both with the threshold applicable to each section. AD and ADA both are possible. You can do that. What are the implications of ignoring discrepancies? Failure to address mismatches can lead to notices for defective returns or underreporting of income. Selection for tax scrutiny assessment, penalties and interest on unreported and misreported income, and delay in refunds due to mismatch in the tax credit. So other three things, first three things, if and when comes, but fourth thing is instant. That is where everybody is interested. If the refunds are not coming, refunds are delayed. And if the CPC adjusts the refund or CPC doesn't give the refund, then getting from the JO is, आपको जूते घिस जाएंगे पर refund नहीं आएगा. It's a very tedious process. Anyway, if there is the amount is big, everybody is interested. Small, then nobody is interested. Anyway, that we all know. There's nothing to explain in that. Some more issues, HRA claims, joint landlords and PAN reporting. When employee claims household allowance, the employer reports the landlord's PAN in the 24Q. If the rented property has joint owners, only one PAN gets captured in the AS, leading to the entire rent reporting against the single PAN, even though there are multiple landlords. I don't have a solution for this. Do you have a solution for that?
Solution
That the HRA will get claim, it is one name.
No. The problem is of the third person. Not.
I'm talking third person. In this information comes under the SLP.
Yeah.
So you can go and look that reporting Dropbox, wherein it is a income belongs to other person. You can write their wife name, PAN number automatically name will come, and HRA amount. There I did one mistake first. I considered the rent as 50% and transfer to the wife's name. But actually you are not supposed to do the rent transfer. It is supposed to transfer 50% of HRA mentioned in the SLP.
Okay.
So if there is a 6 lakhs are rent, I am supposed to declare 3 lakhs in a husband, 3 lakhs into the wife. But only in HRA, only one husband name is reporting comes, and that comes only 3,54,355. Like, so you have to reduce 50% of this particular amount and do that. In first adjustment, I did 3 lakhs rupees, so uska सीधा reduce हो गया 53,000 rupees. और उसमें rectification नहीं हो सकता है. Once you have reported, no revision, no rectification.
This is the advantage of having the interactive meetings. Everybody do not have the solution for each problem. When you face it, something works, it works. Yeah. And one more, next one is single property transfer, full amount for joint owners. In the joint owners property sales, ES often shows the entire sales consideration under the primary co-owner's PAN instead of splitting it among all owners. This results in apparent over-reporting of one co-owner under the reporting of others. We already discussed that, how to do it. That Mr. Gandhi was very helpful in clarifying that. I think they had discussion during the break and they come to a conclusion. Then confirming party versus the actual seller in AS. This is the big problem because not only confirming party, sometimes POA holder also. They, these brokers, when they sell it, they don't bother. So POA holders, they write their PAN only. Then the transfer report in the POA holder. In the same case of confirming parties, if there is a tripartite agreement, third party is only confirming party, is not a recipient of anything. But there also it will be reported. For remote purchase transaction, AS label confirming party sometimes defaults to the reporting entity, that is buyer's registered broker or broker, causing the AS to display the buyer or register under the seller field. Taxpayers may thus see the wrong PAN listed as seller in the AS. So this is we have to follow the same thing in the AS. We have to report that. Multiple broker accounts and purchase cost data. I see now every broker gives you the capital gain data, and even the AS also gives you the capital gain data. How accurate is that? Because broker gives you the accurate data if the purchase and sales are both done by him only, and that too if there is one bank is taken over by another bank and the demat is transferred, then once again they don't capture the data. So now if the data is there, the clients also send the data from the this one. But apparently what you can match is from as a consultant, what you can match is the sale value. If the sale value doesn't match, and if the purchase value is taken wrongly, unless you have got the full data prepared by yourself, or if the client has got data, it's very difficult. But this can reach to a wrong return filing, and if it is advantageous to the client, we can take a chance of going it with it. If it is other way around, then we
But in case of shares, it never matches because they take the rate of the, it goes to NSGL. And our rates are different because it's 1 day before we have sold it or purchased it. And the rate on the AIS is on the way it comes from NSGL in our demat account. So they never match. So for mutual fund right now, it is matching, the data is matching.
That's why they allow that up to 10% mismatch. They don't question that. And majority because NAV is fixed, no, and there is nothing.
So all the shares are not showing, only 100 line items are showing.
In which AS? And that, did we face any problem with that? Anybody faced that problem? We don't have such clients who has got more than 100.
You are not able to see it in the AIS.
Yeah.
There's an option, just a right arrow button. At the bottom, there's right arrow button, it might be hidden there.
Yeah. But actually, you are supposed to file your income data based on your information.
Yeah.
AIS, suppose you have a 200 entry and AIS gives only 100 entry. Ignore 100 entries. You feed up all the data of your 200 entries over there.
See, because
It's required.
AS data is available, don't think that is the only data we have to consider. AS data is to cross check whether you missed something or not. It is not to be base of your data. If you are doing indicative to just to cross check if you missed anything or something.
Corporate actions and IPOs, they are not coming into AIS.
Yeah, as of now it is not coming. It might come later. It's now this is the AS data started how many 3 or 4 years back? 3 years back, isn't
Yes.
Yeah. So as on today we know what is the data coming there, but still there are still huge gaps. And don't think that AS is the ultimate data.
Even intraday transactions are also not captured by the
Yeah, because there is no delivery, na?
Yeah.
And that SFT broker is filing the SFT. He doesn't file. He files only the delivery related data, not the intraday data. Not the intraday data. Yeah, bro.
Off market transaction debit and credit entry है
हाँ.
उसको भी report करना है. Suppose the SFC wife expired, तो his shares of जो transfer होता है demat account से, तो उसको भी report कर drop down में वो आता है, it is non taxable.
That is coming in the AS or in the this one? Yes. Okay. Okay.
And all should be done before filing of return.
Yeah. Yeah.
क्योंकि return file हो जाता है 10 दिन में process हो जाता है, बाद में करने को बैठेंगे
नहीं
तो
होगा. Then आपको mismatch की report आएगा. उसके बाद I don't know. Yeah. Any other practical tips anybody has faced on this particular, because this is a problem everybody is having. We can share the views. Then duplicate or mismatched SFT entries. There is special financial transactions such as credit card spends, mutual fund redemptions, or vehicle sales may be reported by multiple entities. Yes, sometimes retains the highest amount reported and flags the rest as duplicators, causing confusion over which entry to reconcile during the ITR filing. Anyway, this is, may not be tax related because this is the additional credit card spending. Anything, any input in that, Akshay, in this? Yes, sir.
No, sir.
Ah. Now there is a chart treatment of TDS credit on income not included in the same assessment year. There are multiple, as per law, you can take the credit of TDS only if the income is shown credited during the year. Otherwise, you cannot. And TDS has to be deducted on basically on the payment basis, the advances. So always you will have the mismatch of the TDS. So how to deal with it? We made a chart of it. Scenario 1, income accrued and reported in AY N and TDS deduction is AY plus 1 because you accrual basis you account this year, but TDS deducted by the person in the next year. Default treatment is TDS credit not available in AY N plus 1 because that year you have not recorded any tax. We will be sharing the PPT. Yeah. So relief mechanism here is file form 71 within 2 years of FY of deduction. The amount assessment order under section 155 might true. So this is relief available if you have, because this is the other way around where your income is already reported. So in the year of TDS there is no income. You want to take the credit because income tax allows you to postpone the credit of TDS. It doesn't allow you to prepone. Although while filing the TDS is already deducted, you are not allowed to prepone. In that case, this is the relief mechanism. You have to file with the GAO will amend and give you the refund. Next scenario, TDS deducted in current assessment year on income to be reported in next year. So TDS credit default treatment is TDS credit not claimed, lost if not carry forward. You have to carry forward. If you are not carry forward, you lose it. Carry forward, that is compulsory, you have to carry forward. To designate TDS entity as carry forward in the ITR or prepaid taxes and credit carry to the next year and set off against the tax when income is reported. This is other than the cash flow, there is no loss because your TDS is deducted in 1 year and you are claiming in the next year. The 1 year interest you are losing. But this is the foolproof method where there is no confusion and no interventions required. The CPC itself processes it properly. Next one is income reported under 2 PANs. TDS reflected under only 1 PAN. So other PAN that we discussed about that sale of property, similar thing. Other PAN cannot claim the credit. So deductor must file revised TDS return correcting the PAN. Only deductor can transfer the credit. Then mismatch between ITR claimed in claimed TDS and form 26AS. Partial credit allowed intimation under 143(1). So get deductor to file a corrective return. Taxpayer can file reverse ITR on rectification request. Here, you can't file the reverse return, but on rectification, you can file the revised JSON file that you can upload. That is allowed. There, in that case, they process and you get the credit. First thing is deductor should rectify it. Without his rectifying, you get the credit. It's not possible. Unclaimed TDS from previous year, not automatically set off in the current year. Import TDS brought forward via e-filing A or AS. Claim the current year ITR under the tax credit. Balance credit carry forward further if still unclaimed. Because that is possible in case of house property income rent. This is the common thing. If you discount the rent and get for all the 3 years and they deduct the tax in the one go. But your income accrues over the 3 years. So this carry forward need not necessarily that carry forward to be utilized in the very next year. It can be postponed to the post years also. But you have to do the formality, carry forward, brought forward, carry forward, brought forward. Every formality has to be done. It should be incorporated in the return. Then only you'll get the credit. This one I've added because I get maximum call from our study circle members on this. What to do with the deceased person. So legal basis is under section 115 of the Income Tax Act. Deceased person's legal representative is deemed to be the assessee for all tax purposes. Who is legal heir or representative of the assessee? Typically spouse or the close relative or an executor named in the will. So spouse or close relative, I will come to that. The formality is supposed to be done. So that is one thing, or recognized by a legal heir certificate which can be issued by competent court, local revenue authority, Tehsildar, municipal body, or family pension certificate. Or 12, forget it, that's left out. Once appointed, the heir act as a representative assessee with the same duties and liabilities as the deceased would have had. Now, to register legal heir on the income tax reporting portal, prepare death certificate of the deceased, PAN card of the deceased, self-attested PAN card copy of the legal heir certificate. If challenging an order passed by the deceased, name, copy of that order, and that optionals are letter for the indemnity, and all documents will be uploaded in zip file less than 5 MB.
Letter of indemnity means who should sign that? If
Where is the legal heir?
means suppose 3 daughters are there and that.
No, where is except no, we'll go back to that. Who is that?
Nomination from the other.
Yeah, Harsha.
Anyone can take over, anyone can do that.
One person.
Any person can do that.
Anyway, yeah.
Whoever is ready to.
Okay. No objection is not required.
But you can file the return only for the 1 year.
No. See, I'll come to that. We'll come. The thing is,
Then you have
legal
to file it
in the year of death, first year, legal heir can file the return.
Yes.
Because the probate or the succession certificate takes more than 1 year to get it prepared. That generally takes almost a year because 6 months is the minimum waiting period. So if somebody expedites, you can get a probate or succession certificate in 6 to 8 months. And generally it comes in 1 year. So first year it's allowed. Now you can use the PAN of the deceased person if you are as a legal heir. You register as a legal heir, you can use the continue in the same PAN. But once if you're an executor of the will, then you are taking over the estate, and estate has to have a separate PAN and it's a separate legal entity. It has to be assessed separately, and that estate will be assessed till the estate is fully closed. Till then it is done. This is the legal formality. But now, because of the litigation and other things, they allow the legal heir to act as an assessee for a longer period. Return filing also, although it is allowed with 1 year, because there will be chances of rectification, assessments, everything is there. So legal heir, you can use that, whatever is in that PAN, you can continue to do it. But
I had a problem. They are accepted for only for 1 year. And they have subsequently told me to obtain a new PAN for the estate of the deceased person. And accordingly, only earlier they were allowing, but now they are not allowed.
That's what I told you. That is what as per law you have to do. But if there is a pending litigation, old one, then that won't be transferred to the new PAN. So you have to attend in the old PAN only. If there is any pending issues,
You cannot file the returns.
and you can file the return.
You cannot.
You can file the return only 1 year.
Not, they are not accepting at all.
Yeah. That way it's, many people do demand a practical solution that don't, no, practical solution is don't report anything and you get the other OTP, you can file the return. If there is no litigation, no this one, it gets processed. Yeah. Yeah. Here.
In that case, one of the client expired after March, just around July. So in that case, I used the bank statement and I got the legal registered and filed it for March 24. And it was available for March 25 also. I filed it for March 24.
Yeah, that is because the 1 year is not passed. No? Year of passing it after 24. That's why it's allowed. Actually, legally, 1 year is allowed. That's what as per law. And yeah, the thing is, even the legal heirs and other people, they take time to change the investment and all. So the TDS comes in the old PAN. So claiming that TDS becomes difficult. That time, if the old PAN is active, you can file, and people keep the account for a couple of years. The refund also comes, and it gets closed. Many times the legal process is longer, and there is alternate process can be shorter, which is not the right way to do it. But when there is The income tax, when you learn income tax in the colleges, but it's called income tax law and practice. So practice and law need not be the same. Practice is different than the law. And that was when we started off. But now there are three things. There is one income tax law, one income tax system, and one income tax practice. So if there is a clash between income tax law and the income tax system, you have to go what the system allows you. Because you can't go as per law, because that compulsively goes to litigation. Practices, we are all practitioners, we know that. We will not discuss that.
The bank, if you go this,
Huh.
this is purpose support the citizen. Because the support in the citizen and the bank FDs continue goes under two unit scheme. So the second holder did not intimate the.
Yeah, the TDS will go in the old pen only.
It continued in a old pen for then around 3-4 years, 5 years. And if such time, since the it's substantial amount was there, very substantial. So the second holder kept on filing returns for those 4 years, 5 years.
He got the refund, huh?
Yes.
But when there is no grievance, then let's go with it. Anyway, but technically what you have done is wrong.
He refunds, he had to pay the extra because the TDS was 10%.
Either way,
Otherwise, he was good.
either way, that stand is not legally correct.
In between, we should have represented legal representative and then.
Or make an estate. At right way is, you have to as an estate you have to do it. You have to change. They don't charge, and bankers will change the FD to estate without any. You give the letter, they do that. That is not a problem. We should have done it anyway. That is. This is the one area where I get maximum calls, because everybody does some or the other mess up and end up with some situation. And yeah.
So opinion should be changed from individual to estate of so and so.
Yeah.
And what about the IT department?
No, there is separate assessment, no?
Okay.
Separate
So
assessing.
you apply for PAN.
Yeah, there also, if the executor of the bill is single person, you will get the P, that is the individual PAN.
Right.
Multiple, then AOP you get.
Right. Okay.
And taxation also will be accordingly. How to register in the portal, just listed that, should I go through that? Will be how to register legal hair. Can we skip it? Because it's already 1:15. E-verification, NRI without Aadhaar. This is one practical problem I'm facing. There is E-verification modes are bank account EVC, demat account EVC. If there is a pre-validated bank or demat account with the EVC enabled e-book portal, you can do that. Net banking, if there is active net banking facility with the bank account, you can do that. And DSC, you can do that. And bank ATM EVC also you can do it. These are the four is available when you don't have the Aadhaar. So this takes care of the ITR filing which we have prepared. So if somebody is interested, we can quickly go through the financial statements formats for the non-corporates, or if you want to wind up, we can wind up. Let me take the vote. How many people wants to go or want to stay for another 15-20 minutes? Okay, there are enough hands. We'll go through that. Quickly go through that. So here, purpose of these financial statement formats are ensures compliance with the accounting standards applicable to non-corporate entities, promotes consistency and comparability in financial reporting, provides comprehensive disclosure templates of the transparency, simplifies the preparation of balance sheet statement of profit and loss and notes. There are many people I've seen for tax audit also, they just print the tally printer of the balance sheet and sign and send it. How many of you do that? No. Somebody raised the hand shyly half. Just I do that. Anyway, there are many people do that, and some you go by your own formats, and we old people, we still like that horizontal format where assets and liabilities are shown in both sides. So this all happened. Now they made it mandatory. But if you are signing any balance sheet, then You have to go. Otherwise, if you are not signing the balance sheet, you have to file in the ITR because ITR is the prescribed format. There is nothing. If you sign the balance sheet, it should be in the standard format. Purpose is this financial statement format provides standardized format for non-corporate entities to ensure accurate, transparent, and compliant financial reporting. Formats help maintain consistency while adopting specific business needs. So key references are ICA guidelines note on financial statements for non-corporate entities, accounting standards ES1 to ES29 applicable to non-corporate entities, Income Tax Act 1961 and rules for tax compliance, and MSMED Act 2006 for the disclosure requirements. So what is the, I'll just give a comparison. Format structure, old format was flexible, now it's standardized, ICA standard it is. Notes earlier optional, I think 90% of the people never used to give any notes with the accounts. And now is a prescribed sequence 1 to 25. P&L format, same thing. Now traditional format, now there is a detailed headings. Balance sheet, now once again with notes and summary. Applicability mandatory for financial year 24-25. The key components are balance sheet, P&L accounts, and notes to accounts. So balance sheet shows financial position of specific date, including anyway standards, statement of profit and loss, and notes to accounts. I'll go through the format. I hope it's visible. It's the standard format. I'll share the PPT. You can go through that, and it's Excel sheets that available. A statement as an end of specific day showing the entity's financial position. The 2-column format showing current and previous figures. Unit amount in XX currency units clearly specified. Cross-referencing note numbers linked to the detailed ones. Disclosure and authentication required signature of the proprietor and partners. This owner funds, owner's capital, reserve surplus, non-current liabilities, long-term deferred tax, other long-term liabilities, long-term provisions, current liabilities, short-term provisions, trade payables, other current liabilities, short-term provisions. See, what accounting standard and the ICA guideline says that if there is a figure or not, this format you have to print. Means if earlier in the schedule 6 and other schedule 3 balance sheets, if there is something not available, you can skip it. Here, as per the accounting standard, you have to put the full format. Full format, if there is something is there or not.
That is not applicable to not applicable.
Zero, it will be zero, but it will be there. It will be there. The numbers will be the number and the serial should be there.
But why it is you everything? Whatever is not required is the deleting.
That was that you had up to 24. Now you don't have that liberty. Earlier you had the liberty. Now you don't have the liberty. You have to follow this format. Yeah.
Current liabilities, current assets, again, that also what year and all that we have to.
I'll just go through this format. Let me complete this. Even I'm not aware of it. Non-current assets, property, plant, equipment, tangible assets, non-current investments, deferred tax asset, long-term loans and advances, non-current assets. Current assets, current investment, inventories, trade receivables, cash and bank balances, short-term loans and liabilities, and other current assets. And for the P&L accounts, it is it's long term. It is changed in the other format. It is not profit and loss account. It is statement of profit and loss. That I think everybody is aware of it. Who signs the company balance sheet, but I don't know what are the necessity from changing it to profit and loss account to statement of profit and loss. Either way, revenue from operations, other income, total income, expenses, cost of goods sold, employee benefits, financial costs, depreciation, amortization, other expense, and total expenses. Then your profit before exceptional items, profit before tax, current tax, deferred tax, profit for the loss for the period. 2 years, then notes to the financial accounts. If I go through the whole thing, it will take a lot of time. I think I'll skip it. Key components, same, some basic things we'll see that. Owner's capital account. That is name of the partner, share of profit, opening balance, capital introduced, remuneration, withdrawals, and closing balance. Reserves and surplus, capital reserve, revaluation reserve, other reserves, undistributed profit. Borrowings, long term, short term. That's a classification standard what company we are having. Deferred asset also same thing. Now, I don't know why non-corporate will have deferred tax asset. But my team told me that there is under certain circumstances it is possible. So anyway, it is kept there. Key notes for the formats required for the complete financial reporting. Deferred tax liabilities format covers deferred tax assets, expense allowable pay on payment, provision, doubtful debts, deferred tax liabilities, depreciation differences, and reconciliation of net position. Provisions, long-term and short-term provisions, including employee benefits, etc. Trade payables, detailed breakup as per MSME Act with disclosure due to micro, small and medium enterprise interest paid payable and detailed aging analysis that is required. Non-current liability and current liability, including long-term items, advance from customers, others, current liabilities, interest payable, statutory dues, unearned revenue, and other payables. Block, this was the company format. We have to format that. That it took me some time to align myself from listing the asset from right side to listing the asset from the top. But that's what they want. That is how the format is. Investments, non-current and current investment categorized by type. That is government securities, mutual fund shares, etc. with details of face value, market value, and provision for diminution. Long-term advances, long-term and short advances are bifurcated by security, secured, unsecured, etc. and by receipts, related parties, director and others, including doubtful provisions. Inventories, format for raw materials, work in progress, finished goods, stock in trade, stores and pairs with mode of valuation and basis of inventory accounting. Trade receivables, secured and unsecured, that considered good and doubtful, classified as outstanding for less than more than 6 months. Net provision includes unbilled receivables. Cash and bank balances include cash and cash equivalents, that current assets, deposits more than 3 months, checks, cash, less than 3 months, and other bank balances, earned deposits less than 3 months, 12 months, etc. Then other non-current current assets including non-current security deposits, prepaid expense and others, and current assets including interest accrued and other items not classified elsewhere. Notes format, revenue and expense detail formats for categorizing revenue streams, cost of goods sold components, and comprehensive other expense disclosures. Key considerations for statement is relevance and accuracy. Ensure information is factually accurate and relevant to user decision-making needs. Disclosure requirements, comply with all mandatory disclosures as per applicable accounting framework. Consistency and comparability. Maintain consistency in accounting policies year on year. Regulatory compliance, ensure statements align with relevant statutory requirements. Timeliness, prepare and present financial statement information with statutory deadlines. With this statement, I must be sounding like a professor teaching how to prepare the balance sheet. But that was the need of the hour is they have to do that. And I want to skip this slide because we are already late. And thank you very much. And it's always a pleasure to talk before my own people. It's more interesting. You feel like home. So thank you very much.
Thank you, Hudson, for such an insightful and enriching session. And I am sure each one of us will be benefited. For formal vote of thanks, I invite our Deputy Convener Lalit Bansal to give a vote of thanks.
Thank you, Dr. I don't know how many of you voted that I think the giving was special attention to Haridas. He clicked so many programs, I never seen many programs. So he was saying, my face is like that, you must go to early Aadhaar card updation. So there must be something that he was getting so many things. And Haridas, you have to give him the can't give that kind of citing now. So you have to wait for 3-4 more hours to have the science. So anyway, thank you, Prakash. Good afternoon and happy to you all.
members, it's my privilege to give a vote of thanks for our own in-house speaker. Thank you, Haridas Bhatji, for the teaching session and practical aspects on selection of correct ITRs, various issues faced by members in review of various ITRs, and dealing with other issues in finding ITRs. And I will propose thanks to our learned speakers, and also like to thank all the members and staff for the efforts of this session. Thank you. Have a nice day.
यार जानता है ये